Is Peter from finmods.com. I'm the creator of this financial Excel model, the SaaS financial model. And in this video, I'm trying to give you a little overview about this model. And then after a few minutes of the overview, I'm showing you how to build a SaaS financial model in Excel using this template, starting from revenue down to personnel and finance. Okay, so let's get right into it. You can see here is already opened the Excel model SaaS Giga. It is available in two versions, Mega and Giga. The difference is cash flow and balance. Mega only includes the one-screen assumptions page, which I'll show you in a few moments, the detailed personal planning, the income statement, marketing, key performance indicators, detailed loan repayment, but not cash flow and balance. Cash flow and balance is only included in the Giga version. This is the full Giga version. And the next one I want to show you is the manual. It is included here as a tab. And in the manual, there are all the terms that are used in this financial model are described here. I think most of the terms are self-explaining, but to make clear what is the assumption of each term, you can read it here in the manual. So now we come to the core of the model, which is the one-screen assumptions page. You see here there are 4 or 5 areas on the left-hand side and 2 on the right side. All yellow fields are input fields, so it's very easy for you to recognize which fields you have to fill with your assumptions. And working with this model is intended to be very easy and simple because we have a nice overview of the main input areas, and that's the main point. You get immediately feedback from the summary and the charts on the right hand side. Means when you enter a new assumption for, let's say, about ads or website or new prices or different conversion rates, you can observe the impact on your whole financials immediately, and you can decide whether it's a good change or a good input or not. And you have this all on one screen, and it's very compact, and therefore I think it's a huge help to build your financial Excel model for your SaaS business. Okay, so we're still in the overview. The next second assumptions page is for personnel, where you can plan your staffing. You can put in the different positions, salary, and the number of employees for each position. Then there is the tab marketing, which you probably won't need in detail because all the important main figures are here shown on the assumptions page. And of course, income and balance and cash flow. And marketing mainly uses helpful data to provide for the calculation of the different formulas. Then we have a charts page where you have some charts with a higher resolution. Then the income for 5 years, which is probably very important for you. The cash flow for 5 years. And balance for 5 years, which is all interconnected, of course. So this model Giga includes all 3 main financial statements: income, cash flow, and balance. If you plan to use a loan, there's also a loan calculator with details for payment, interest, and principal, and balance for each planned month. And you also have income, cash flow, and balance on a monthly basis. The final tab is the chart data, which helps to build the charts and provides the data for the charts. Okay, so let's come back to the assumptions page. And I want to start with you from the start, fresh and new. So we put away this template with already input data, and we use a brand new fresh template of SaaS Giga without any data. So this is the way you can start to build your financial model for a SaaS business. So I would recommend to start here with the revenue side. You see here blue, in this blue frame, there are the data for your revenue. You can define 3 different subs and 3 different products that you may sell within your software or app. Then there are some general data. Then within the red frame, there are your distribution channels, how you probably will want to sell your software. So we can plan the website, ads, email marketing, influencer marketing, and sales reps. Then here within the yellow frame are the expenses you will have to consider. You should consider for server hosting, customer service, and the regular expenses for any business. And within the green frame, you see the investments you need to take to get your business up and running. Mainly, there will be investments for software development and office supplies and such things. Then financing, cash, loan, capital, and some miscellaneous data for building the balance and the cash flow statement. And then as soon as we start to enter our data, you can observe on the right-hand side the summary of your financial model. You get revenue here for year 1, 2, 3, 4, and 5. This model contains a financial planning for the duration of 5 years. So you have here the summary, the revenue per year, the COGS, which means cost of goods sold, then the summary of the expenses, EBITDA, the earnings before interest, tax, depreciation, and amortization, and the break-even revenue. You also can see here the EBITDA for year 1 in percent and COGS in percent for year 1. Then there are some very important key performance indicators like the MAU. MAU is the monthly active user. The monthly active users means the number of users that are active every month that use your software. The MAU includes the paying and also the free users. Then there is MRR, which is the monthly recurring revenue. And this revenue only includes the revenue you get from your subscribers. So this would be this part of your revenue, but it does not include, the MRR does not include product sales beside your subscriptions. Then we also have the UAC, which means the user acquisition cost. And the UAC shows you how much money you have to spend to acquire a user by website, by ads, by email, by influencer, or by the sales reps. And on the right-hand side, side of the UAC, you see the ULTV and the ARPU. These are very important key performance indicators. The ARPU is the average revenue per user, so it's the revenue per user on average. And the ULTV is the user lifetime value. We will have a look at them a little bit later, and you will also see here some charts that help you to find out whether your financial model is promising and great, or if there are still some troubles and where are the strengths and weaknesses. Okay, so that was a little overview. Now I would like to build this model right away together with you. If you already have some ideas about your business, I think you can build your model within, let's say, an hour or two. If you're fast, maybe half an hour for the first draft, and then after having a first draft you can work on, you will have to review it again and again and work on it and make and work on the details. But a first draft with this template can be made within an hour or something like that. So okay, let's start. We start with the section revenue. And on the upper part, we have the subscriptions revenue, and on the lower part, we have here the in-app purchases for products. So first, we can define the free user share. What does this mean? This means you can provide a free version of your software, which you may want to offer because it increases your conversion rate. And here you can define how much of all users are free users. So let's say, for example, 70% of all your users will be the free users. Then we come to our first sub. We have free subscriptions that we can define. We call this sub silver. You can call it however, sub XYZ. You can call it however you want. I stay now with these simple names like silver, gold, and diamond. Then we can define a fee that your customers pay per month. Let's say the silver is our small sub, and let's say we sell it for $30 per month, which as a monthly fee. Then the share, let's say, of all subscribers is, let's say, 15%. Then we come to the gold sub. The gold is more expensive and has also more value. Let's say the fee is $60 and the share is 10%. Then our diamond sub is available for $100 and the share is let's say 5%. And yes, as you can see here, the total shares must equal 100%. What does it mean? You only have 100% of your subscribers, and the free plus the free different paying subscriptions must total 100%. So we have 70% free users, 15% silver, 10% gold, and 5% diamond, which equals to 100%. Let's say you make a different input, then you get as a warning a red flag, a red cell, which shows you, okay, the total is not correct. You must change it to 5%, for example, here, and then we have a total of 100%, and so now it's calculated right. Okay, so we have the basic assumptions for our free subs. Let's also input a few products. Let's say we have an ebook, a tool, and a course that we also offer within our software that can be bought as an add-on, and we say the ebook is for $10 available. The conversion rate means the conversion is how the percentage of people, of users that also buy the ebook. So let's say we have a conversion of 3% and a COGS of 0 because it's a digital product. Then the tool, for example, some download tool that your customers can buy. We sell this, for example, for, let's say, $100, and the conversion is 1% of all users. And we have a course, a video course or something like that for $300, and the conversion is, let's say, 0.1% of all users. And a COGS of 0 for the moment. Okay, so then here on general, you can enter the first month of your business plan. Let's say we plan January 23 or whatever you want to start your business. Then there is a field for users at M1. M1 means month 1, so this would be the first month of your business. And users, you can input, let's say, for example, 100 users. If you already have a software running, you can also use this financial model, because you can consider your existing customers, the amount of your existing customers. And then this one is a very important one. It's the user churn rate per month. When you start a SaaS business, this means that you acquire customers that subscribe for your subs, for your subscriptions, and they use your software on an ongoing basis for a certain amount of time, and they will pay you every month a certain amount of money, a fee as we defined it above. And you will not only acquire customers, but unfortunately, and that's just a fact, you will also lose customers every month. And you should, to get a realistic and correct financial model, you also have to consider the user churn rate. And the churn rate describes the percentage of user that you lose every month. So let's say the users are are using your software on average for 2 months. Then you can make a simple calculation. You can take the number of 100 and divide it by the number of months the users use your software on average. Then you get the churn rate, means 100 divided by 2 months equals 50%. So, or if they stay on average 2.5 months, that would be 40%, for example. Okay, so we start with a churn rate of 40%. Okay, so then we already have some sales, and these are sales from our in-app purchases because we started with some users. But we say we have 0 users at the beginning, and so we don't have any sales at the moment because we only defined our products yet. So now we are coming to the marketing side. And on the marketing side, we are describing how we are going to make sales. And we have 5 different distribution channels. That's our website, that's ads, that's email, that's influencer marketing, and that's sales representatives, sales reps for short. Okay, so we start with our website, and you probably already recognized it. Whenever I click or choose a certain yellow input cell, you also get here this yellow information squares here, which shows you a short abbreviated information about the input, and which shall help you to understand the model the best way and find the information you need as quick as possible. Okay, so website, we are with our website, the organic traffic in month 1. So our website should have some traffic at the beginning. It can be as low as 1 visitor per month. Or let's say we have a little website running and we already have 1,000 website visitors per month. These are only visitors. That's meant with traffic. So growth of organic traffic in percent per month. So when you work on your website, your blog, and you put in your content every month, and you can also consider a content creator within your personnel, within the personal sheet, the web content creator here. You can plan web content creation actively. And let's say, okay, you're putting new content on your website every month, and you expect to grow your website per month with, let's say, 3% per month. Be careful with the assumption of growth rates, because as these are growth rates from month to month, they grow exponential over time. Okay. The next assumption is the conversion traffic to user. So how many of our website visitors are going to subscribe, becoming a user to subscribe to our software. So we assume a 2% conversion. So, and now we are starting to get our first revenue data. As you see on the right hand side, revenue year 1 now is $10,463 or euros or whatever currency you are working with. We also have our first MAU and MRR data. We see in month 12, we have 66 users, month 24, 95, and so on, up to month 60, so the end of year 5, with 274 users. And we also get a chart for our monthly active users. The gray part are the free ones, and then we have our 3 different subscription plans, in our case, silver, gold, and diamond. Okay, so we also see our first data for ARPU, the average revenue, and ULTV, the customer or the user lifetime value. User structure here with free user, silver, gold, diamonds, the core financial data, the user acquisition cost, and our revenue. What sources are revenue, subscriptions, and in-app purchases. Okay, so let's go on. We come to ads, and we start with an ad budget of $300 per month, and we say we spend on average $1 per click. That's the CPC, the cost per click. We increase our ad budget by 3% per month, and we assume a conversion from click to user of also, let's say, 3%. This is the maximum PPC budget per month. This gives you the opportunity to put a cap on your maximum budget. So now it's with $999,000. This is a very high number, of course, $1 million per month. You can set it on a much lower rate, let's say for $200, yes, and then you can see it influences the revenue and the whole financial data. So if you want to keep it open, just put in a very high number, which keeps all the exponential growth more or less open. So now we see also our UAC, our user acquisition cost for ads, is $33 at the moment. Then we come to email marketing, which is one of the most profitable marketing strategies that you can use in your business, especially for software. And it's highly recommended that you also consider email marketing for a software business. You could enter and start with an email list. If you already have some emails on your newsletter list, we say, okay, for example, 200. Then the opt-in rate, user to email, this describes the percentage of users of your software that also opt into your email newsletter, so that you get the possibility to send them an email once a week, a day, or a month, or however you want it. And that's a huge asset which you really should use. You should the secret of successful email marketing is to start with it. I think that's the most important one, because it builds up from month to month to month, and you get more and more emails, and the more emails you have, the more marketing power your email marketing gets. Okay, let's say 10%, it's not too much, 10% of all users, so they already use your software, 10% of all users opt into your email newsletter. This can be a much higher rate, for 30, 50%. I don't know if you require email for a login, for example, you may have a 100% rate. Let's keep it here with a low number, with a 10% opt-in. Then the email opt-out rate. You not only gain email addresses for your newsletter, you will also lose some of them each and every month, especially when you are active in email marketing. Let's assume a 3% opt-out rate of all users, of all emails that are on your list that you lose every month. Then the sent emails per month. This is the amount of messages, of promotion messages you send out to all your email list. Let's say we do once a week. So let's say 4 emails per month. The conversion email to user is now we are making users. This is the percentage of email recipients that become a user of your software. So let's say we assume a 1% conversion. Email provider fee per month, that's the fee you pay to your email service provider, let's say $50, something like this, for an average email marketing account. There are also free email marketing providers with free plans. As far as I know, MailChimp, I think, offers a free plan, and maybe also GetResponse. I'm working with GetResponse. I'm very happy with it. Yes, check them out. Try them for free. It's a great stuff. Copywriting cost per email. If you don't write your promotion emails yourself, you will have to pay a copywriter. If you do it yourself, you can leave this blank, but if you hire a copywriter, you can consider the cost of copywriting, let's say $50 per email. Influencer marketing, super powerful marketing strategy. we can here define the framework for influencer marketing. We start with the followers, the average followers per influencer we are working with. Let's say our average influencer has 50,000 followers. Then the organic reach, that's when an influencer on social media, for example on Instagram, puts out a post or a video or a shout out or whatever with a promotion for your software. Not every follower will see this post or your promotion, so only a small percentage, and the percentage varies between, let's say, 3 to 9%. I think Instagram in 2021 had an organic reach of 9%. The tendency is to become lower and lower, but you can think about 3 to 9%. You should Google this for the social media channel you're thinking about to use, and let's assume a 7% organic reach. So then we have from 50,000 followers we can reach 7%, and from these reached ones we can convert some of them. So now we have the conversion rate, let's say a small conversion of 1% of all reached users, of all reached followers are becoming users. This also includes the free users. So when we talk of users, we mean the users for free and the free paid subscription models. Then the cost per shout out, let's say that's the money you pay to the influencer, $300 for one shout out. The shout outs per month, the number, let's say we do 4 shout outs per month. And we can also consider a growth, and let's say we consider a 3% growth of shout outs per month, so that our influencer marketing grows over the months and years. And now we see our sales is already growing. Revenue in year 1 is 92,000, year 2 148,000, and so on. And we can also engage sales reps. The sales reps do contacts per day, and let's say, what is the contact? The contact is the number of potential customers a sales rep contacts per day. This could also mean if a sales rep contacts a corporation with, let's say, 100 employees that could use your software, then this would mean contacting one company with 100 potential customers would be 100 contacts per day. And this way you can plan your sales potential. And now let's say our sales rep contacts 100 contacts per day. For example, 10 companies with 10 potential customers or users would equal 100 contacts. Okay, so then what's the conversion rate? How many of the contacts are converting to users of your software? Let's say we have a 5% conversion rate. And the work days per week, how many days per week are your sales reps working? I assume 5 days per week. Okay, so now we also have sales rep data in, but not UAC for sales rep yet. This has a simple reason, because we didn't have yet defined how many sales reps we are hiring. So short view on the personnel tab. And the sales rep's salary, let's assume, is $45,000. However, it may be in your company. And we consider one sales rep for each month. So we have a sales rep from month 1 to month 12 for the beginning. And we come back to our assumptions page. And now you see we have a USC also for the sales rep. In 12, it's $34. Okay, so let's have a short look here on the right-hand side on the summary. So we already started to enter revenue and marketing, and so we also have some financial data. We have a MAU, the monthly active users, starting from 870 to 2,471 in year 5. and we can see which marketing channel is the most profitable one. We have almost all data, but not for the website, because we have not yet planned a website content creator. Let's say we spend $5,000 per year on content creation from one guy, or how much ever you want to spend. And we come back to our KPIs and we see, in month 12, the website UAC is $15. So this is a very helpful performance information here. And you can look here together, the user lifetime value and the user acquisition cost. When the user acquisition cost, the UAC, is lower than the user lifetime value, your marketing is profitable. The user lifetime value is calculated by ARPU times contribution margin. That's your gross profit margin divided by the churn rate, which means when your marketing costs are lower than the lifetime cost, you make a profit. And this is the simple way, which is very helpful to define your marketing measures and your plans, and to decide whether it makes sense to put more budget in your ads marketing, or put more effort behind email marketing, or which performance indicators would you like to improve, the conversion, or should you increase your budget, and so on. So you can always have a look on these KPIs, the ULTV and the UAC, in comparison with the basic revenue and profit data. Okay, so we move on to our expenses, and we start with server hosting. Server hosting consists, the cost for server hosting for our software will be app maintenance. App maintenance in percent of the development cost of your software. This will be probably something like 20 to 30% of the development cost per year. Let's say here on the right hand side, finance, our software development was $100,000. And once your software is ready for the market, this won't be the final version for sure, because there will always be some need for update, for bug issues, and for improvements of your software, and so on. So the maintenance of a software is an ongoing task, and well, you can consider the cost of this software maintenance here with this point. Okay, then the cost per user per month for software, for server hosting. Let's assume some cost of 5 cents per user, 0.05. This can also vary very much. You can Google and compare different server hosting costs. So based on this assumption, we have server hosting fees of $35 per month during year one. Then next is the customer service. You can consider a certain amount of customers that need service, that need support, customer support. Let's say 7% of all users need a customer service ticket. Then you can define the needed time to resolve the customer problem. Let's say, for example, 15 minutes on average. And the full-time work week in hours, we define it with 40 hours per week. The customer service can also be recognized here in personnel, and we can enter customer service employee, let's say for $35,000 per year, and here one per month for the beginning. Here is the information how many customer service employees you need based on your assumptions, the needed CS employees, the needed customer service employees. As you can see here right now, we don't have a very high need, only 0.09 customer service employees. But this grows, of course, very fast when your business model also grows. So then we have some regular typical expenses for utilities. These are explained in detail here in the manual. If you are looking for the expenses, you can see here. Expenses utilities are the costs related to electricity, heat, sewer, water. Then fees and insurance, that's general liability, insurance, errors, omissions, and so on. Administration, that's bank charges, travel expenses, entertainment, office supply, repair, accounting, legal, very important. Then leasing fees for cars, machines, computers, software, and so on. Then this is also very important, that's debit and CC fees, that's the payment fees for processing the payments from the customer to you. Usually they are about between 2 and 4% of sales. You can also consider some other expenses, office rent and payroll tax as a percentage of wages. So now let's enter some data. Let's say 0.5% expenses for utilities, then 1% for fees and insurance, then 2% for administration, 1% for leasing, 2% for payment processing, 1% for other expenses, an office rent of $1,500, and let's say 12% payroll tax. And finally, we come to our investment. We already entered the software development cost as one-time investment of $100,000. You can also consider further investments, like say office computers for $10,000 and so on, legal advice for startup. Then the useful life in years, that means the duration, the period, how long you can use the asset you bought within your business, let's say 7 years. So this helps us to calculate the depreciation per year, which is used within the income statement and the balance and cash flow statements. Then financing, this is the answer to the question, how are you financing your business? How much cash equity do you have? Let's say, for example, 50,000 equity and 25,000 by a loan. That's a total capital of $75,000. And you can determine the loan further. The starting month, let's say January 23. The interest rate per year, 6%, for example, and the term, let's say 7 years, 5 years term. And some miscellaneous inputs, assumptions. The income tax rate, that's the tax rate for your income, the tax you pay on your profits, let's say, for example, 20%. Of course, this varies from country to country. And then we have free inputs, which you only need for cash flow and balance. Therefore, this is only included in Giga, but not in Mega, in the Mega version of this financial Excel model for SaaS. Accounts receivable percent of revenue, let's say 5%, accounts payable, for example, 6%, and deferred revenue, for example, 7%. They are explained in the manual in detail. So now we have almost finished working basic draft for our financial model, because we haven't yet defined all the employee data. Let's say we have a general manager for 50,000, okay, in year one, okay, and let's say we have what else? Some IT, very important, IT, and one IT man. Okay, and you can all consider all the people you need, and then you can mark this one, copy, and paste it to each to each year. Then you can build the personal very quickly. Pardon me for my bad English. But I'm not, as you already heard, not a native speaker. I'm from Austria, not Australia. Austria, that's the country in Europe, in the heart of Europe. We don't live in the mountains, but between the mountains. And we don't have kangaroos. And yes, I also do speak some English, and that's okay. So that's me. Let's come back to assumptions, and we can see we have our first draft for our financial model. It gives us a lot of feedback, and now it's up to you to rework on your model, to review it, to find the best way to make this business a profitable business. Because right now we see our model is not profitable yet, so we would have to improve some things. We would have to make more sales. We do make a loss in the first 3 years. Only starting in year 4, we make a profit. So what can you do? You can review every point from revenue, prices, and marketing, and every input cell until you get a model that works for you and that seems realistic and achievable. Let's say, for example, we improve our website, and we because of our very smart blog post writers, we can gain a 5% growth. And the conversion rate is, because we hire some great copywriters, is not 2, but let's say 3%. Okay, another growth. And then we start with an ad budget of, let's say, $1,000, and the cost per click is only 50 cents, and the increase of the budget is 5%, and the conversion is 5%. And our email marketing is improving. We are doing more email marketing, let's say 10 messages per month. And the conversion is 2%, and we are making more and more profit. And let's say our influencer shout outs, we are doing not 4 but 20, and now we are deeply into the green. And that's the way how you improve and review your financial model for a SaaS business, until it's a great model and until you like it. And of course, be careful. Please don't overdo. Research all these topics in detail. Google provides so much information and leads you to so much information about conversion rates, about the realistic numbers for influencer marketing, or the possibilities with online ads and so on. But this model helps you to construct and build a financial model for your SaaS business, I think, in a very easy and fast way. And you can also review the results, not only here in the summary, but you also can have a look at the 5-year overview. You get the revenue, you get details about all the subs, the products you sell, the COGS, the different expenses, and the profits and net income. And you also get data for cash flow, the balance, which is balanced. That's great. Means that these sums are equal, and then a balance is balanced. And the check says you, okay, the check is okay. We don't have a problem with the formulas. And you can also have a more detailed look into the monthly data of your business model of each of the 60 months. Okay, I think that's it. And that shows you, I hope this showed you how you can use this Excel model. If you're interested in this model, you can have a look, and you find it on my website, finmods.com. I hope you enjoyed it. If you like this video and this channel, I would be very happy if you give it a thumbs up, and if you subscribe to this YouTube channel. I probably publish it on YouTube, and it will be great if you see you again. And I wish you a lot of success with your SaaS business. Have a great time and see you next time. Bye bye.